Australia continues to be in one of the largest migration booms in its history, and yet most investors are still looking in the same tired places, chasing the same crowded markets, and reading the same news headlines. And that's usually how you know the real opportunities are elsewhere. For those who don't know who I am, my name is Nick. I'm a director here at Handle Properties, and our buyers agency buys approximately $10 million worth of property every single month and growing. We help investors scale from their first property to multi-million dollar portfolios by identifying markets well before they become obvious. And right now, migration is quietly reshaping demand in ways many investors are completely overlooking. Why migration matters more than ever. Net overseas migration has surged to over 500,000 people in a single year. Now that's not a normal cycle, it's a structural shift. Migration just doesn't increase the population numbers, it changes things like where people want to rent, where they can afford, and how quickly vacancy rates tighten, and which markets absorbs that demand first. Most new migrants rent before they buy. That means migration shows up first in rental markets and then in house prices. And when supply can't respond quickly, values move. This is where disciplined investors get ahead. Our first hotspot category are the regional cities that are absorbing skilled migrants and not those retirees. These locations are benefiting from decentralized policies, healthcare and education expansion, continued infrastructure spending, and affordability compared to the capitals. Think of large regional centers with hospitals, universities, TAFEs, and government-backed employment that continues to attract migrant communities. These migrants often arrive with stable incomes, long-term visas, and strong rental demand. What we like here are houses close to those employment hubs in established suburbs and not those new estates. Price points that still allow yield to be above those metro averages. These markets are not flashy, but they will continue to compound quietly. The second hotspot is inner ring and middle ring suburbs with student-driven rental pressure. The second opportunity is closer to home, but still widely misunderstood. These are suburbs experiencing severe rental pressure due to international students. Universities are basically back at full capacity and student numbers continue to rise, and purpose-built accommodation has not kept up. This is creating sub 1% vacancy rates, sharp rent increases, and renewed investor demand. And here is selectively what we want to focus on. Walkable locations to universities, older style units or townhouses, low-rise but tightly held apartment complexes with strong owner-occupier appeal. These assets benefit from immediate rental pressure, affordability-driven demand, and a natural buyer pool that is beyond investors. It's not about student stock, it's about scarcity in the right location. And the final hotspot is Perth, Melbourne, and Brisbane, with suburbs with migration and infrastructure alignment. This third hotspot category is in Perth, Melbourne, and Brisbane, but not where most people are looking. Migration into these cities continue to remain strong, but the real opportunity sits where population growth and infrastructure spending intersects. We're talking about suburbs with major transportation upgrades, health or education investment, employment hubs expanding, and of course, limited future supply. These markets benefit from interstate migration, overseas migration, but also internal owner-occupier demand. The property types we prefer are houses with land, established streets, but zoning upside with future potential. This is where migration acts as the accelerant, but not the only driver. Now, how do we turn these migration data into investment decisions? At Handle Properties, we don't just buy based on the migration headlines alone. We want to overlay this migration data with 30 plus other indicators, such as vacancy rates, income growth, supply pipelines, infrastructure timing, and of course, buyer demand. Migration tells us where pressure is building, but the data tells us where to invest. That's the difference between speculation and strategy. But here's the key takeaway. Migration doesn't lift all markets equally. It rewards investors who understand where people are actually landing, how long-term supply takes to respond, and which assets benefit first. The biggest mistakes we see is buying where migration has already peaked, ignoring rental signals, and chasing the same suburbs everyone else was talking about a year ago. If you want help identifying migration-driven opportunities before they become obvious to the media, reach out. At Handle Properties, we're buying $10 million worth of property every single month, and we help our clients position themselves ahead of these population shifts. So like, subscribe, and comment if you want a follow-up video where we break down the specific suburbs that we're tracking right now for 2026.